Good afternoon, Simple Trading Life community. Welcome to today's live stream. Today, excuse me, I feel like I have to sneeze. Today, July 1st, is our first ever live stream where the entire community is welcome, right? Because now the premium and free communities have been combined together. So everybody is welcome now on these live streams. So as we get several people already, and where you see me type hello, people can type into the chat there. So hopefully everybody's having a good day. It's been a little bit choppy today. We'll go over a few things here in just a minute. I wanted to jump on here early because I have to get off a little bit earlier than normal, so I try to get on about 10 minutes early. And we'll go over everything here in just a second. Hey Rohan, how are you? Good to see you, bud. So we've got ES up here on the screen as normal, 30-minute chart. As we can see right now, price is sort of just in a little bit of a range or consolidating phase. Can come down here, look at our RSI that we use for momentum, and you can see it's flat, right? Okay, so when we see this price action up here, that makes sense, right? They go together. Here's opening price level, which today was 309,450. The majority of the price action has been above opening price, but you can see we've sort of been trapped between opening price and this level of structure. There was a supply zone here. I've already removed it because we went up, we tested it, and then we went up and we broke through, but what we've never been able to break through is this level of structure right here. This gray level of structure. And I'm going to show you where that comes from. Give me a second here. I might have to go to a higher time frame, but give me a second. I think I can do it. Let's look here. I don't know. Nope, doesn't go back far enough. I got to go to the 1 hour because I know I can get it. Yep. Okay, you see it right here, right across here. This is the level I'm talking about. So let me zero in so you can see where it came from. Okay, it's this level of structure as we were moving down. You see this? So we're going, had a little bit of a double top there, then we went lower low, lower high, lower low, lower high, lower low, then we ranged across there. So this level of structure was sitting just above this supply zone. All right, so I've already taken the lines off. I can put them back on. It might make it easy just for a visual, and then I can take them right back off. All right, so be the bottom of this candle, not the wick though, just the bottom of the body, which is 3103.75. 30.95.50. 30.95.50. I'm just going to try to get it close for now. Doesn't have to be exact, just for the illustration purposes. And then 31.05. So let's just go like kind of like that. All right. Whoop! It didn't set for some reason. There we go. Okay. So we had this level of structure, which we still have, and we've still never been able to get through, right above a supply zone. And so we had this rally base drop, strong drop away. And then up here, all this is this level of structure where we came down, pivoted up, we moved over to here, then came down through. Now, let's go back over to where we're at, current price. Let me go back to the 30-minute so everybody can see this. All right, now here's today's action. right? Here was our opening candle. In fact, let's get in even closer. All right, here was our opening candle today. And as you can see, we covered a lot of ground, but it was a whipsaw. Okay, what we mean by whipsaw is price goes up and down fairly violently. Look where it went. Okay, it opened below the supply zone, which had been tested already this morning. Okay, and I think, yeah, it had been tested over here as well. All right, you see the violent reaction the first time it was tested. Then we ranged. All right, then we dropped down off of a level of structure. Then we went down to the trend line, which I showed you guys in the room. I can show you again here in just a second. Then we went up, right? We went up. This is opening candle today. Now, I don't want to get ahead of myself. This, okay, not only did we have a hammer right here off the trend line, what did we have here? That was the ADP jobs report. And it was better than what they expected. And for once, right, better than expected news led to a positive move, which that's not always how it goes, right? Sometimes they try to trick you. But we got this positive news, and then it came up. This was the last candle before the opening candle. And then the opening candle, it ended up going all the way through the supply zone, pierced out of it, got into this level of structure, and then shot back down. All right. Then we came over, we tried again, got all the way to the top, pushed it all the way back down. Then we moved up. Okay, we flushed, we caught some support right here. Okay, as you can see, this is really nothing more than a level of structure. And if you come right across here, see where this was the top of this level of structure. That's right, Fed notes. It's the Fed notes in a couple of minutes. So typically, the market doesn't get as much of a reaction from the Fed notes as it does when they're actually giving commentary or it's something unexpected, but you never know, right? You never know. And I know I'm not in anything, so I don't know if anybody else is anything. You might want to either exit or make sure you have some nice tight stops if you're on anything that might be market related. Okay, so then we came right to the top, we pushed down, we caught support here, kind of where this level of structure would have been, back up again, poked our head out, but immediately came back down. And then so far, right now, we're just sort of stalling out, as you can see down here where our momentum is. All right, everybody sees that. Now, this morning, I was able to, I took one early trade before the market opened, and I think it was 112.50, and that was a pretty easy trade, and that was a long. Then I took 3 shorts. So my shorts were on this opening candle, and my original short, I got blown out right away. I couldn't even get a stop put in, and I lost over 200 bucks. But then I watched because I thought what was going to happen, and that's my fault for thinking, right? I thought because we'd already had this strong move to the upside that if we went up into this supply zone, that it would come right back down. I was actually looking for it to maybe come back down to the 20 or maybe even back to the trend line at that time. But what happened, okay, right here, now we were trending up very strongly with momentum at that time. But what happened was we blew right through where I thought possibly, I was thinking over in this wick, plus we're in the supply zone. I was thinking, you know what, there's a good chance that it'll turn back down. Well, when it blew through there, then I started looking at this area up here. Okay, because this is a level of structure on top of a supply zone. This supply zone has been tested a few times, right? Let's come back over here. Okay, look at that. There's 1, here's 2, here's 3, here's 4. And it finally broke through on the 4th try. So what I was looking for here, though, this was before this candle, was that if we broke out of here and got up into this, I was thinking there was a very good chance, a high probability, that it would exhaust and work its way back down. So I took a couple of shorts up here, and they worked out beautifully. Okay, they worked out beautifully. I posted them in the room. I think one was for 400 and something, and one was for like 500 and something. And it came back down, but then what happened is we were still on this momentum, a strong momentum up. It made another attempt, and this time it actually closed up in here, okay, which now I'm going to eliminate this. Once you close above it, eliminate your supply zone, gone, disappears. So now you're looking to see, can you break through this level of structure? If you can, then you start looking for more upside. If you can't, then you start looking for your targets to the downside. So we already know that it didn't break through. It pierced, but it couldn't hold it, right? It couldn't break and hold. So it pierced up through there, came back down, and now we've kind of been in this little range right here. You could almost say it's a contracting range, like you could sort of draw it like that. Okay, you see what I'm saying? Something like that. You should be able to see that with your eyes. But really, the range is right through here. Okay, this is where it's been ranging. So now if it breaks above here, then we're looking for it to get above there, which is 3113.50. Or if it comes down, we're looking for it to get below here, which is 3101.75. And then target would be, this would be a target, and it would be a good target because you'd have your 20 SMA kind of confluent with opening price level. If it got through there and below this, then you would be looking at the trend line. Then you would be looking at the trend line. So let's go back and let's look. Let me just close this up a little bit. I want to show you this trend line. How much more can I squeeze it in? There we go. All right, there's current price. Here's where this trend started. So this has been this week. So all week, we've been trending up. Okay, just from a really generic perspective. Higher high, higher low. Higher high, because it's higher than that. Okay, then we went lower low, but then we went right back to higher high, higher low. Higher high, higher low, because it's higher than that. Okay, avoid that, higher high, higher low, higher high. Okay, and as you can see, we've tested 1, 2, 3, 4, 5 different times. This trend line has been tested and it's held beautifully every time. Even here, you see this big spike down below? What happened? It couldn't clear this and it pushed price right back up above the trend line, closed above it. And then we just kept on going with the pattern to the upside. So we've been steadily moving up all week. All right, so that's just important from a bigger perspective. I always say look at the bigger picture to know that until something changes, what would that change be? Very simply, it'd be a break and a hold of this trend line. Let's get back in close here. Okay, it would be a break and hold of this trend line. I'm going to extend it to the right. There we go. That would tell us, okay, if it broke and then got below something like this, that would tell us that something is changing. Now up here, okay, you see we looked like we might have been starting to put in a double top, but then we started to range. If it was truly a double top, we would have went up, and then started back down this way, probably to here, or if it broke, okay, back down into this area. But it didn't do that. Right now it's just bouncing along this level of structure right here. This level of structure is valid until it's broken. Till it breaks and holds, it's valid. And as you can see, 1, 2, 3, 4, 5, 6, 7, 8 candles in a row have not been able to break and hold. Okay? So we're going to keep our eye on that. Now, let's see, where was it? trying to remember which candle it was. I think it was this one. I got hammered on my last long. Okay, so yeah, I know it was this one. All right, so I got hammered on my last long. Took a $250 loss. What happened was my analysis originally, I wasn't really paying real close attention to the numbers, and I said that the key level was 31.10. So I actually set what I call set and forget. That just means I set a buy, and I set it at 31.50, and then I went off and I was doing my own thing, right? I was watching charts and doing other stuff. Well, I got to looking around at the chart, and I'm like, whoa, wait a minute. It's actually, the key level is 31.13. It needs to break and hold 31.13. At about the same exact time, my buy order triggered. And I'm like, I heard it. Like, I heard it in my ear because it tells me, it'll say order filled. And I'm like, okay, here we go. You know, because I was thinking, you know, maybe it's gonna trigger, it'll get up here and then just take off. Well, exactly the opposite happened, as you can see. When it got right up here, it triggered, it got right up here, and then it just, boom, it just started dropping. And I couldn't get a stop in fast enough. And then it actually, I got out at 250. It was actually all the way to like 325 at one point, and then it started going back and forth between like 300 and like 225. It was just like going back and forth. And I was like, do I hold on? Do I hold on? No, I'm just gonna take my medicine, right? I didn't really get distracted, but I had forgot that I had that pending order just sitting there, and I never moved it up. I should have moved it up to like 31.1375, 31.14, something like that. If your key level is 31.13, well then really you should be 3, 4, 5, you know, maybe even 6 ticks above that. And I just didn't even think about it until I heard it go off in my ear. And then I was like, okay, all right, well maybe it'll just take off. And it just exactly the opposite. It went this direction. So I lost focus. That's how I put it in the room. I lost focus. I forgot. And I know a lot of guys that do that. And here's another common thing that happens. You enter a trade, okay? You enter a trade and you have a take profit target and you have a stop, okay? And you've put them in, okay? That's what I almost do every single time. I'll put one in on both sides once I'm in the trade. Well, let's say your stop gets taken out. All right, so you might have had I'm just making something up. You were trying to make $300 and you had to stop at minus $100 and your stop gets taken out. And then you forget that you have that order, okay, that was going to be an exit order. Well, now it's still sitting there, and if you don't cancel it, if price does go that direction and it hits it, you're now back in a trade, but not the way you want to be in the trade, right? Because you would have been looking to exit there. So that happens to a lot of traders. That's only happened to me once or twice, and usually as soon as I hear it go off in my ear, I just get out of the trade immediately. I just get out. Like I'll show you over here. Okay, so on Trade of 8, all I have to do is hit that button right there. Exit at market and cancel. It exits everything you have. Okay, even if you had multiple orders, if you hit that button, it's going to exit everything you have immediately at market. All right. So if I hear that, like, and I did that and I just forgot, you know, like my stop got taken out, and then, you know, like 20 minutes, half hour later, you hear order filled, and you're like, what? I didn't have an order. Oh yes, I never got out. I never canceled my original exit order. Now it became a buy order because it's just sitting there all by itself, right? It's an exit order when you're in the trade, but once you're out of the trade and your stop's been hit, those two, so you have 3 things. I want everybody to follow me. Most of you, I know this is total basics, but a lot of new traders don't understand. Let me go back over and I can just show everybody. I'm not going to enter a trade. But if, okay, here's current price, the yellow. If I was to sell, like I think it's going to go short, it would say order filled and I'm in the trade. I could then set a stop, you know, up in here. Okay, set a stop. There'll be an order just sitting there. And then I could go 3 to 1 or wherever I think profit could be. And I set another order and it'll just be sitting here, and that is an exit order. So if price came that way and hit that order, you exit the trade. But what happens is if I entered here, and let's just say I had a stop up here and it came up here and it stops me out, that other order is still sitting down here and now become, instead of an exit order, it's an entry order if it gets hit. So unless I come up here then and hit exit and cancel, it's just sitting there, and if I forget about it, it could get triggered and now you're in a trade not in the way that you meant to be. Okay, so I hope that makes sense to everybody. Let me get back here. Okay, we got a nice crew today. This is the first day where the whole community is welcome to these live streams. Excuse me, other than the YouTube live streams. This one is just for our community, but it's for everybody in our community. And now I think we're up close to 340 members now. I think the last time I looked, it was 339. So we just keep growing and growing and growing, and that's the plan, right? We want to keep doing that. Okay, so Infamous on Tradeovate, they are a futures-only broker. So if somebody likes to trade futures, there's a few of them. They're not the only ones. There's a few futures-only brokers. One of the great things about Tradeovate is they offer, not on every single future, but on some of the most popular futures, they offer special day trading rates. So between like 8 a.m. and 4 p.m. Eastern Time, you can trade at a fraction of the cost. So instead of having to have, you know, $10,000 or, you know, $8,000 or whatever the normal requirement is for a lot of futures contracts, they can be as high as like 16,500, or they might be as low as, you know, 1,500 or 1,200 or whatever, depending on the instrument you're trading. On several, not all of them, several, and ES is one of them, they have special day trading rates. So you can enter a standard contract for $550. So instead of like whatever, I don't even remember what the normal requirement is. I want to say it's over 10 grand. But as long as it's during 8 a.m. to 4 p.m., it's only $550 per contract. Okay? On micro futures and on micro E-mini, it's only $55 per contract. So you can be in a microcurrency, and when I say microcurrency, only the contract is micro. Okay, only the contract is micro. So you could be trading the Australian dollar futures, the euro futures, the pound futures, the yen, the Swiss franc. That might be it. Because they're not the currency pairs, they're futures. All right, just like the E-mini is the future of the S&P 500. It's the future contract of SPX. The futures on currencies, it's just the Australian dollar, the Canadian dollar. That's what it is. So it's the Australian dollar, the British pound, the Canadian dollar, the euro, the Japanese yen, and the Swiss franc. Those are all currencies that can be traded on the futures. And from a micro contract perspective, you can get those for $55 each. No PDT rule. And now, of course, it's going to be at a smaller rate of return, right? So it's going to be 1/10 of what it would normally be in terms of what you're going to make. So you make $1.25 per pip instead of $12.50 per pip, or you'll make $1 per pip instead of $10 per pip. So whatever that contract would pay on a full contract, it pays 1/10 of it. But you only have to pay $55 to take one. I mean, obviously, you could take 5 of them, and now what's 5 times $1.25? It would be $6.25, right? I'm trying to do the math quickly in my head. So it'd be $6.25 per pip, and so on and so forth. Or you can trade the standard contracts. They have day discount rates on those as well. I just can't remember exactly what they are, but you can go to tradeovate.com, go to margins and click on it. It'll tell you exactly what the normal margins are, and then if that contract has any special day trading margins. That's awesom. If you're somebody like me, I love to trade futures. So if you like to trade futures, you can trade, E-minis, you can trade NQ, you can trade RT, you could trade commodities like wheat, hogs, you can trade gold, you can trade currencies, anything that's a futures, but not all of them have those special day trading rates. But a lot of the most popular ones do. Okay. Yeah, absolutely. I mean, if you get comfortable and you go to a live account with them, yeah, it's absolutely safe to trade ES, right? That's who I trade through on that. And then I still use Tastyworks if I'm going to trade options on equities or straight equities or some of the other things. You can only trade futures on Tradeovate currently. I've heard them say that they're exploring possibly adding forex or possibly adding equities in the future, but I haven't heard like that's imminent. I know from when they started to where they're at today, like you can trade futures options, and when they very first started, you couldn't. So that's something they added after they got going. You used to only be able to trade the standard contracts. Then they added that you could trade options. Then they added that you could trade future spreads, which is something that I haven't done a lot of. Now, I trade spreads, but mostly on equities. But future spreads, there's some really unique advantages. It gets a little bit higher level, and so I don't talk about it much in the room because we try to keep things as simple and basic as possible. But future spreads, you can just I'll give you a 30-second version. There's a couple different things you can do. You can trade the same exact instrument. So take ES, and you can trade the September contract and buy and sell the December contract. Okay, so you have a spread there because one, okay, your front month moves quicker than its counterpart. All right, so there's a spread there. You can sell the front month and buy the back month. Okay, you can trade different contracts. So if you think something's correlated, like I'm just making something up, like energy, maybe you think oil and natural gas are correlated somehow. You can buy or sell one and then buy or sell the opposite to create a spread. Now, the advantage to that is it severely knocks down your margin requirement. Like sometimes I know like on ES and some of the financial instruments, instead of like thousands of dollars, the spread might only cost you a few $100s, with still a lot of upside. Now when you have a spread, you do limit your profit potential, but you're also limiting your risk. Instead of having thousands and thousands of dollars of risk, you might only have a few $100s of risk. And there are videos out there. You can look up future spread videos on YouTube. The rate of return on the spread is actually better, even though the profit is capped. So I'll give you an example. Let's just say the spread cost you $400 and you made, I'm making a number up, and you made $4,000, okay? That's where you were capped. Let's just say that was your cap. You couldn't make any more of that, but you made it. All right, so you only had 400 at risk and you made 4,000. That's a tremendous percentage rate of return. Now, if you would have just played standard contracts, no spread, you might have had $10,000 at risk and made $40,000, and $40,000 is a lot of money, but from a percentage of rate of return, what you had to risk and what you made, it's much smaller than the spread was. So what some savvy traders do that have tons of money is they will play multiple contracts on the spreads, right? So if they played 10 of those same spreads, they would only have 4,000 in the spread and could make 40,000 in profit, right? Because 400 turned into 4,000. So if they had 10 of those, they had 4,000 at risk and they made 40,000. Now their rate of return is so much better and they had less money at risk. So I don't want to get in the weeds on that. It's a little bit more advanced. It's a little bit more complicated. But anyway, just thought I would cover that real quickly. Okay, as we go back here, as you can see, still nothing really happening. Right here we are on ES. Let's do this. Let's look and see how our watch list from today is doing. Let me get back to it. Yesterday, I didn't really have time to go over on yesterday's live stream our watch list from yesterday, but there were some killer profits off of the names on the watch list yesterday. That's not going to happen every single day. Wow, we've had a lot of interaction today. That's awesome. Should be coming up here pretty soon. There it is. Okay, here's today's watch list. So let's go ahead and look at some of these. ATVI. I got to go to daily. Okay, ATVI. And wait a minute. Oh, I didn't get ATVI. ATVI. There we go. Man, Thinkorswim is in slow motion. Yeah, here we go. Okay, so this was an inside candle. So you guys watching, I saw some questions from the free members. The premium members know, like I've only been giving the free room the watch list with no, not saying that it's an inside candle, outside candle, hammer, or shooting star. So the premium members know an inside candle, you're looking for it to break one way or the other. An inside candle is just what it sounds like. It opened and closed inside of this previous candle. You can also see here what we had on ATVI. Let me draw it in because this is like beautiful. Okay, what we had was a contracting range. That's one of my favorite things, is either contracting or expanding range. See that? Okay, we're getting tighter and tighter and tighter, and then boom, we get a breakout. Okay, so this was on the watch list today. Your trigger is the high of this candle. So that was 76.43, and it's been as high as 77.80. So that's $1.40. And on ATVI, look, all you have to do, look at this candle compared to the rest of these candles. It's one of the biggest candles on the screen. So that $1.40 from the trigger, that would have paid very, very well. Okay, that would have paid very, very well. Okay, so ATVI, big winner right off the bat. Okay, next one, BA, Boeing. We'll look at these. As long as Thinkorswim will cooperate. All right, Boeing. All right, now Boeing, a little bit, okay, what we had here, it opened here, it went up to the 20, so it would have triggered at 188.49, so say 188.50, and it went as high as 190.61. So even though that looks small, that was a $2 move to the 20. Now, if you guys, again, if you guys are new, you can start reading in the premium lessons. If you read about price action, there's something we call a single candle power reversal. That's what this is trying to do right now. So it goes one way, takes out one side of the inside candle, then it reverses. When it comes back through the opening price, okay, so right there would have been opening price. The trigger, so you can get two trades, right? You went up, and as it starts coming back, you're going to exit because that would have been a long. Now, if it takes out opening price going the opposite way, that would have been at 185.88. So let's just say 185.85. Then it's been as low as 180.55, $5.30. You could have caught $2 one direction and $5 the other direction on the same stock. Okay, on BA right here. Now, a single candle power reversal, it'll continue and it'll take out the bottom of this candle. It'll take out both sides. I don't think it has yet. 180.59, 180. Nope, not yet. Still about 20 cents away from taking out the bottom of this one, but still, you could have caught $2 to the upside, $5 to the downside. You're welcome, Infamous. You're welcome. Okay, so let's look at the next one. Baba. All right, so we've had two winners so far. Not everyone's going to be a winner, okay? But the key is, and especially for you guys that are new that haven't been in the premium room, okay, like this one here, you really don't have any kind of trigger. But this is one we're going to be watching. Why? Look at what it's doing. Okay, give me a second here so I can draw it in. Look at what it's doing. All right, it's forming a contracting range. See that? You should, after a while, you'll be able to see that with your eyes. I draw these in for your guys' benefit. Okay, the range is getting tighter and tighter, and just like we saw with ATVI, at some point, it's going to pop one direction or the other. Doesn't matter what it is, right? Don't even try to guess. Just wait. When you start to see a break, you can enter with a nice tight stop. All right, and either way, but as it contracts, energy builds, and at some point, it's got to go one direction or the other. All right, so there's nothing to do on this today, but this is one that everybody should keep on their watch list. Okay, so that was Baba. Let's see, next one was Baidu, which they're both China names, and that's why I have them on my list. I just like to keep some China names on there. Whoop. Oh, I hit the wrong, sorry about that. I put Baibu instead of Baidu. Very similar, okay? Nothing to do, but again, you can see it's in a contracting range. And Baidu and Baba, they perform very similarly. Whatever one does, the other one's almost always sort of about the same. Excuse me. All right, so that's the next one. Nothing to do, right? Okay, CGC, this is a weed stock, marijuana stock, and it's a high beta stock. What that means is it doesn't have to move. It can only move a little bit and you make a lot of money. When you hear high beta, that's what that means. Now, just remember, that also means if it goes against you, a small move against you can be a big loss. All right? Okay, yeah, so we've had a good move here. Here was our trigger, 1633, and it's been as high as 1694. So that's about a little over 60 cents. That doesn't sound like a lot, but I'm telling you, that makes you a lot of money on CGC. All right, because look at the size of the candles. All right, today's candle hasn't even moved $1, and that's about average, right? If you look through here, actually, it's a little bit bigger than average. This candle here was only about 80 cents. This is the biggest candle on the screen. It was about $1.40. Actually, just slightly under that. But you see most of these candles are under $1. So when you catch a 60-cent move on CGC, you're actually rolling. You're rolling. I had a trade not too long ago, maybe a couple months ago, because this is one of my favorites. When I trade equities, CGC is one of my favorites. I made like good money. It was, I'm going off memory, it was like 350 or 500 bucks or something like that. And I exited because I got to my target. So I'm just going to make something up. I know it was a short, and let's just say it was this. This was my trigger, and right here was my target, like just above the bottom of this wick. All right, so the move was about a 50-cent move, something like that. Again, that doesn't sound like a whole lot. I made like, it was either 350 or 500. It was somewhere in there on like 50 cents. And I wasn't like heavily into it wasn't like I had 100 contracts or something like that. Just had a handful of contracts. Well, it kept going and going and going, and it got down to support, and then it went a little bit lower. Well, it ended up moving, I want to say it was about $1.15 that day. And I kept watching, and if I would have stayed in, I would have made well over like $1,000 on like $1.15 move. That's the advantage of a high beta stock. And you can look it up. You can go to like, what is it, finviz.com, which is free. You can look up any name, and it'll tell you what the beta is. So the way beta works, 1 is basically like it's flat. So if you go above, the higher you go above, and they consider anything like over 1.5 to actually be higher beta, and if you get above 2, that's considered high beta. Well, let's just look. Let's just look and see where it's at. At one time, CGC was over 3. So let's just look it up together. So you go to Finviz, see it, finviz.com. Right up here, just type in any name you want to look at. CGC. I don't know if it'll make me click on it. All right, then you just roll down here, and beta, oh, and it's not even on there for some reason. I don't know why they took it off. That's weird. I wonder, maybe, I don't know. I don't know why it's not on there. But anyway, the last time that I had checked it, it was like over 3. And I'm sure there's somewhere else you could check it. You can probably check it like on your broker platform. If you're, now I can't do it on Trade-Evate because they're futures only. But if I was on Tastyworks, I'm sure I could look it up. But the last time, it was over 3. That's extremely high. In fact, I had a scan set up at one time on Tastyworks to give me the highest beta stocks. CGC was always at the top. It was always at the top, and that's scanning like the entire market. So that's why I like CGC. Okay, you can get a lot of good info, though. Look at the ATR. Daily ATR is $1.14. That means the entire range that it moves in one day is only $1.14. So you can see why I'm saying 60-some cents. If you get a 60-cent move on this stock, you are making money. You are making money. So if you're somebody who has a smaller account, look at names like CGC, Tilray, TLRY, PSTI, CODX. Those are all names. They cost a little bit less. You can get options really cheap, and small moves will pay off. Okay? Just trying to help you guys. Help you out. All right, next name. Place. PLCE. PLCE. And let's see. This is Children's Place. We did trigger. The high was, or the trigger point was 38.47, and it only went as high as 38.58, I think it says. So you really wouldn't have made much. Again, this is a small, lower price stock. It doesn't take a big move, but you really need more than 10 or 15 cents, and that's all you would have got there. Now it reversed and it's coming back down through, but this late in the day, I wouldn't want to try to take a single candle power reversal move. Okay, you see how it went up? It's coming all the way back down through. Now, if this was earlier in the day and it starts to go red, you can enter right there because you would expect it then to come back through and try to take out the other side of this. All right, Roku. Let's see what Roku is doing today. Oh, look at this. This is gorgeous. Here's our inside candle. Here's our trigger. 117.87. So just to make the math easy, 117.90. That's your trigger point. It's been as high as 128.82. So almost $11 from the trigger. And look, it's one of the biggest candles on the screen. Almost $11 from the trigger. Ding, 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 ding. There's your winner right there. There is a winner. Okay? That's obviously, you can just look, right? Here's your average size candles. Now, here's a big one. Here's a big one. Bigger, but this is one of the biggest candles on the screen. And right there's your trigger. So once it takes out the top of this, you're in. You put your nice tight stop. That sucker just ramped. All right, big winner on Roku. Next one, T-Mobile, T-Mus, T-M-U-S. Nothing really to do. Right there, it's really close if it triggered or not. Right down here, okay, because it opened up here. Yeah, opened up here. And then it did go down, and then it worked its way back up to here. Okay, so nothing really on T-Mobile. Okay, T-Mobile. All right, then we have Twitter. We only have a few more names. On days that we only have a few names, I'll usually try to go through most of it. Okay, here we go. Gap up. We had a hammer. It was also an inside hammer. Those are beautiful. Okay, so your trigger was at the open 30.15 and it went as high as 31.17. So you caught a dollar move on Twitter. Look at these candles. Okay, it would have paid. A dollar move on Twitter would have paid. And then we have two more, J&J and Lake. J&J. And then we have a Lake. Hey, Grayson. Good to see you, bud. Grayson's in the house. All right, two more. Let's get over here. I think our swim put us in a really weird area there. Okay. It triggered, but you can see it didn't really do anything right there. Okay. And then last one is Lake. And same thing. Barely triggered. It's actually still going. Barely triggered. Later in the day, this is something I want to warn you guys who are just now starting to get into the whole price action thing. The later you go in the day on a daily signal, the less likely you should be to take it. All right, so when you start getting, 2:30, 3 o'clock, definitely you don't want to take it after like 3:30. Now, could it just absolutely explode? Sure could, right? But remember, this is a daily signal. And the day is an hour and 20 minutes from being over. So if you're just now triggering, I wouldn't be as excited to jump in. Those other ones that triggered early in the day and explode, those are the ones you want to be in, like Roku was, right? CGC, those ones. Those are the ones you want to be in. If they triggered late in the day, I would probably leave them alone. Okay, let's go back to the 30-minute. All right, we've already been on here about 50 minutes, so we'll get off here pretty soon. Let's see where we're at on ES. All right, still there. We're still not doing anything. Still not doing anything, okay? We're still ranging right through here. All you gotta do is look down here too. You see this? No momentum. No momentum, one direction or the other. It's flat. If I wanted to, I could draw a little box around there, and that shows me that momentum is flat. This is the definition of chop. If you guys are new and you hear other traders talk about it being choppy, right, here's the definition of chop. Very little movement, and it's up and down, up and down, up and down, up and down. Okay, but it's not really going anywhere. The problem is, especially if you're an options trader, that's going to kill you, right? Options, you need quick, solid moves. You want to see something like this to the downside, this to the upside. This would be gorgeous if you're an options trader. You want to see quick moves going in your direction. This is the last thing you want to see right here, okay? Because you're just not going to make any money. More than likely, you're going to lose. Your best case scenario is you get out, maybe break even. You do not want to trade in the chop. Now, we are at a point in the day when we should see activity start to pick up, all right? So we're looking, I've already told you, we're looking for a break up here above this, or a break down here below this, and then that should get us momentum down this way, and that should get us momentum going to the upside if we got above here. We are still right here in this level of structure. We have not been able to, even though we've pierced through here, right? Where did we close? Way down here. So when you hear me use terminology like clear and hold or break and hold, that's what I mean. We've got to clear this and then hold it. We got to close up here and then go higher. Now we may come back and retest the top and then go. One of my favorite patterns is a break, retest, and go. That can happen this direction too, right? You can break, retest, and then go. Because a lot of times when you break through something, what will happen is you finally get through, and whatever direction you're going, like let's just say, I'm making something up. We break through here, then we come back and retest, and then we go lower. What that is sellers, they finally got through, they might have some profit, and they're taking a little bit of profit. They're regaining their strength, and then they're going to make another move. Okay, that's what a break, retest, and go is. And obviously you got the bulls trying to fight back a little bit, but typically it's one side has taken control. Okay, so let's just say again, this comes down here, it gets below here, gets to maybe about right there, then it comes back right here to this level, 3103.75, retest it. Okay, all that is people taking profit there. Then they regain their strength and then they push lower. Thus, break, retest, go. All right. And it looks like it's trying. We'll watch it here for just a minute before we jump off. Okay, you see how it's waffling right here? Okay, it comes down, it goes back up. It comes down, it goes back up. It's struggling right here at our resistance level, at our support level. Okay, it was resistance on the way up. Now it's support on the way down. It's struggling there right now. There's a reason these levels are marked. If you guys have never watched the video on this YouTube channel, go to how to draw accurate support and resistance levels in 2 minutes. That's all it takes. Watch a little 2-minute video and you'll know exactly how I draw these. And there are times when we come across the name that I don't trade very much or don't watch very much that I'll draw them in for you and you can see it. It's very easy. We go to the 4-hour time frame. I'm going to show you what it looks like. Okay. Go to the 4-hour time frame. Go to line charts. Almost any trading platform will have line charts. And then what you're looking for are sharp pivots and bigger moves. Okay, sharp pivots, and bigger moves. You want to avoid the choppy stuff. Okay, you kind of see how that looks on there. Now when we go back, you go back to candles. A line chart weeds out noise, and 4-hour, it just over my many years of experience, it's the best time frame to use to draw your support and resistance, because you're weeding out the little stuff that can chop you up, right? You don't need to worry about all this stuff. You want these moves. See this? Okay, these are the moves you want. These are the moves you want. Okay, you're not worried about this stuff, the choppy stuff. So if we come back over, okay, now it's pushing back up again. You see it could not clear this. Remember I said this, we got to clear this. We couldn't do it. See that? Didn't quite get there. Now it's pushing back up. So we're still ranging, still chopping. But everybody should know what to look for. Okay, if there's no questions, I'm going to go ahead and jump off here. We've been on here now almost an hour because I got on 10 minutes early today. And again, welcome to those of you who have always been in the free room and have missed out on a lot of these live streams. Have questions, you know, if there's something you want me to look at, things like that, have them ready. Most days it's going to be in the afternoon around 2 o'clock. If I jump on earlier, I'll alert the room, right? I can't do it every single day. I've got other stuff that goes on, my family. I do have some other business interests that I have to attend to occasionally. But most days I do a live stream at some point in the day. And if you guys have questions about anything, like just to give you an example, I think it was last week. One day somebody had asked me in the room, hey, on the live stream, can you talk about this? Can you show us how to identify, supply and demand basics? Yes, absolutely. That's what we're here for. Or somebody might say, hey, how would you trade support and resistance based on today's price action? Well, when we get to the live stream that day, I can show them exactly, right? I can show them exactly. Oh, if we have, I'm trying to see if there's anything here. Let me go back. I'm looking for something. And if I don't find anything right now, it's no big deal. Okay, perfect, right here. Right here, shooting star right off of resistance level after a strong move up. This is one of the absolute best trading setups you could ever see. And when you see these, I know a guy who he runs a trading room in a service, and he's kind of an over-the-top guy, but he is ultra successful. I don't talk about individual traders. I'm not here to badmouth anybody. I'm not here to try to pump other people up. But this one particular guy, he's just like me. This is like one of his favorite setups. Now, something you will never hear me say, and that's what I'm getting to. He'll tell his followers, when you see this setup right here, he'll say, all in. You need to go all in. And I will never say that. Never say that. But that's how good of a setup this is. Strong move up. This is a beautiful shooting star. Let me, I'll close it in a little bit more. Okay, beautiful shooting star. When it takes the bottom out right here, okay, most people are going to have their stop maybe right there around the body, or, a dollar or two in, few ticks in, whatever your stop is, it doesn't matter, because you wouldn't have got stopped out here. That tiny little wick right there, that's not stopping you out. And then look at the move. Okay, look at the move. Look where it went. Now, my profit target was going to be down around here. I was in this trade, by the way. Okay, you're going to be down around here, the bottom, and that's fairly conservative, and that's still a pretty big move. Okay, this was like I'm looking at it right now. I want to say it was $15, $16 move. About close to 18. Yeah, close to an $18 move. Then right here, we got this rest. I like to take it in bits and pieces. Like some people, they want to try to hold on the entire time. That's tough, right? Because what happens, you get these resting candles, or you get this and you see this wick start to come back against you and you panic and all that. It's just easier to me to have conservative targets and take it out bits and pieces. I think that's a better, more high probability way of doing it. Thanks, Kelsey. I appreciate that. But all I want you guys to see here, again, somebody had asked me before, how do you trade off of support and resistance? This is like Take this picture right here. Take this picture. Strong move into resistance. You get a shooting star. You take it right underneath here. I wouldn't be, normally I'm really worried, like when you have a moving average real close. I wouldn't even be super worried right here. Okay, it's that good of a setup, and you can see what kind of a move it gave. I don't care if you got it to here. That's super strong. If you took it in bits and pieces and you could have entered here just below there and look and exited there, or you could have tried to go all the way down to here, like you could have been trailing it. All right, whatever. All I'm saying is you can see what kind of move it produces when you get the right setups. When you get the right setups. Now, what you don't want is 1, 2, and then you get this hammer, and then this comes here, and then it bounces and goes that way, and somebody will say, well, you told me that if I get a hammer off of resistance, or I get a shooting star off of resistance, or a hammer off of support, it's in context, okay, right? Read the lessons, and I'll always point this kind of stuff out. Strong move into resistance. Then you get a shooting star bouncing off of resistance. This is a golden move. Okay, golden move. If this shooting star is like the second candle, it's not as good, right? Plus, look at momentum down here. Let's just say it was the second candle. Okay, not bouncing off a resistance, not really and then momentum is to the upside. It's not as good a play. The probabilities are much lower. But when you see this, right, and it gets right up here, you see it kind of stalling out, tries to poke its head, comes down, goes red, forms the shooting star, boom. You take that like all day long. All day long. And it'd be exactly the opposite if you were down here. If you had a strong move into a support area and got a hammer, flip that upside down, and that'd be your hammer. Okay? As soon as you take the top of that out, you're looking, this could be a target, and then so on and so forth. If it keeps on going up in here, or like right here with this pivot, this level of structure right across there, it's that easy. When you keep it simple and you don't try to overthink this, okay, I'm just telling you guys, there's 10 of you, at least it tells me there's 10 of you in here right now. I'm telling you who are listening and the people who are going to watch this later, don't overthink it. Look for stuff like this and trade it over and over again. Don't try to force things. Don't try to see things that aren't there. Don't take this, right, and it's the second candle after a strong move down and it's just now starting to go up and it's just in no man's land. Don't take that and say, oh, but I had a shooting star. That's not a high probability play. This is an ultra high probability play. I'm telling you, this is as good as it gets right here. This is as good as it gets. Or if you had that same exact thing, but down here, strong move down, then you have a hammer bouncing off of this. You take that all day long going to the upside. That is a high probability play. But that's only things that you can learn through experience and by keeping it basic, right? Don't rush into things. Don't worry if you miss some trades now and again. I'd much rather miss a trade that works out and try to jump into a bunch of trades just because I want to get into a trade. You do that, you're going to lose money. Guaranteed. Guaranteed. All right, let's see here. Yes, Kelsey, you're right. That was that one. Kelsey entered, and let's see. She said she got stopped out, and then she missed the big move. And don't hold on too long. Take profits at your targets. Yes, absolutely. That's what I'm telling you. That's what I prefer to do. I prefer to take these bigger moves in bits and pieces. You're still going to make really good money, and you're protecting yourself. Okay, like see this wick right here. What if it doesn't stop? And what if this becomes a hammer after a strong move down? Right? I'd much rather take it where it makes sense. Take it just above here. Take it down here. Now, I probably would have been a little bit closer to this, but then if it starts going against you, just get out. Lock your profit in. You can't go broke taking profits. Everybody laughs because a lot of people, you'll hear a lot of people, a lot of traders say that, or there's a lot of different, phrases they use, but it's so true. You cannot go broke. You cannot lose money if you're taking profits. Don't listen to those people who are saying, oh, but you could have got this much. If you only would have held on longer, you would have made this much. Okay? For every one time that happens, it's going to go against you 3 times. I'm telling you, right? From experience and from watching traders just like make the same mistakes over and over and over and over again. Well, why didn't you get out when you had profit? Well, because I thought it was going to go further. I thought it was going to go just a little bit more. And then they end up giving all their profit back and usually go in red, and then they hate themselves. They're sick to their stomachs. They start to revenge trade. They lose more money, right? That's how accounts get blown up, and that's how people just like drive themselves crazy because they tried to get a little bit more. Lock in your profit. You can never go broke. Your account will just start to build and build and build. I call it piling, right? Pile those small profits on top of each other, and then it compounds because now you can take bigger trades with no more risk because now you have more money, right? It's just simple math. If you've got $500 in your account, you should only really be taking trades that are about $100, okay? But if you had $5,000 in your account, you could take trades where maybe you had $1,000 in the trade is what I'm talking about. That's not your risk. Your risk is going to be even smaller than that. Should be around 2 to 2.5%. The bigger your account gets, it should go smaller. Your risk should be 2% or 1.75 or 1.5, right? Because now you have more money to play with. That's how it compounds. That's the great thing. That's what the winning traders have figured out. Okay, over the many, many years and the few traders, there is no doubt that trading is a 80-20, 90-10 game, meaning 10 to 20% of the people make all the money and 80 to 90% of the people lose all the money. Those guys have figured out that if they just consistently and conservatively take wins and let them pile up and let their account grow, that their risk actually gets smaller. They make more money and they can take bigger trades, but it's a smaller percentage of their overall account. So anyway, I don't want to go off on a tangent here. It's we're 1 minute away from power hour. Let's take one last look and then we'll jump off of here. Oh, there we go. Okay, still not doing anything. See that? We came down here. Remember, we were red. Now we're right back up into the range. Right back up into the range. If you were smart, I would do something like this. I would avoid that very top one. I would come right around like this. Okay, I would avoid that. When I say avoid, I wouldn't draw the box clear up around there. This is what you're looking for, a break out of here or a break out of there. Simple as that. Doesn't have to be any more complicated as that. And then have your targets. This would probably be my target to the downside. Target to the upside, I would have to look. Let's see. I feel like I got to sneeze. That's why I keep grabbing my nose, because I feel like I'm going to sneeze. All right. And then target to the upside would be right here, the top of this candle. So it'd be up there around 30. I'd have like 31.1750, because the top of the candle is actually 31.1825, like 31.1750 to the upside, and then opening price range to the downside should this box break. Okay, so if that breaks this way, okay, your 20. If the 20 is above, then the 20 would be my target. See how it's above right now? That would be my target. And then up, it'd be 31.1750. Okay, simple as that. See you guys in the room, and we'll see you tomorrow. Have a great day. Bye-bye.